So let me get this straight. News comes out on Friday that the U.S. published tariff exclusions for specific products. These would apply to consumers, smartphones, and chip-making equipment, which would be very beneficial to Apple, NVIDIA, etc., if this were to be the case. So that came out on Friday. A day goes by and we saw weekend Wall Street futures, which I know aren't necessarily the most trustworthy, but still gives you an ideal glimpse of sentiment. We saw them go up. I think it was like 2 to 3% on NASDAQ futures on the weekend on Saturday. And then Sunday today hits, and you can see that this news came out that nobody is getting off the hook for an unfair trade, according to Trump. There was no tariff exception announced on Friday, and chips are to be assessed in national security tariff probes. So completely walked back on the news that came out on Friday evening on Sunday for today. So not even 48 hours went by and we saw him walk back on that. And then we saw over here that the futures on weekend Wall Street fell back, although still we opened up as of 21 minutes ago, was up 1.22%. I believe at the time I'm recording it right now, futures are about 0.75% in the green. So a lot of craziness, first of all, over the weekend. Also very interesting that there's a potential other insider trade that we saw over here based on Apple's unusual flow. So I want to go over that because, of course, they would be the net benefactor of this news that somehow came out but wasn't actually said. So complete wreckage in the entire administration so far. Very difficult to follow along with them. But if we go over here to Apple, flow from Friday, super unusual. Obviously, because of that post, you can see they posted on the Cheddar Flow account. But then also over here, the reason why it's unusual is because there's a lot of premium. Plus, a lot of this is out the money in terms of the strikes. You can see here, this one was a call leap for the 230 strike for June of next year. Over here, 1.2 million for about at the money at 195 for a shorter dated expiration. And just across the board, a lot more calls, 220 over here, another 220, 185, 200, etc. Most of these were further dated. So that is a caveat to this. It's not like they're trading short dated ones. So it wasn't as obvious as those SPY calls that we saw last week, if you remember that. But still, these were unusual because Apple doesn't really get that much flow, at least outside of earnings time period. It typically isn't the case. So this was super unusual going into that. Of course, they would benefit if that news were to come to fruition, which brings a lot of questions, by the way. Like, did they think this news was supposed to come out over the weekend and then Apple would gap up a ton come Monday? And then for whatever reason, Trump walked back on it and they weren't aware that he would walk back on it? Do they even know that that news was coming out in this case? Maybe it wasn't insider trading like we saw with those very obvious SPY call orders that were executed about an hour before the news we got last week. Just a lot of questions and uncertainty across the board, but thought I'd share this at the start of today's video. I also want to go into S&P 500 because I mentioned last week I'm looking for 5,510 to reclaim on SPX in order for this to go much higher. So far, we have yet to get above that level, and based on SPY over here, we actually retested my 513.92 pivot. Remember that in the last video, and this over here would allow continuation of 532 as long as we held above, and you can see we found a bounce immediately. There was almost a circuit breaker that got hit on NASDAQ when it went down here. It was actually down negative 7% on the day, but it got picked up before the 2-minute rule, and then it was able to continue much higher. Conveniently, if you followed the Twitter account, you noticed that around that time, I have to scroll up here to go to the time that they retweeted it, but we can see over here, look at this. They added tens of millions worth of S&P 500 calls, as well as sold puts below the bid right near the low over here on SPX. So they were able to add all of those going into this kind of flush that we had around this time period. There was that circuit breaker scare. And then afterwards, from around the time period they bought it, and of course they were averaging in, so to speak, as it continued to fall down. But from that time period around there, rough estimate, it's up well over 3% at the moment, which is a very large move for the S&P 500 in only a 2-day time span, all things considered. So they were able to nail that move. And you can see from over here, they were able to get 200 points, and then on a percent basis, that would equate to a little over 3% overall. So a lot of interesting things happening in the market with this volatility so far. And as long as we continue to stay above, obviously 513.92, but then the next pivot I have is 532.73. Then we can see that extension higher to, of course, the level that I really am interested in, which is what I have circled over here. And I'll go to the daily to show you that. That is the 5,510 level, because if we can get above that, that would open a potential for this much larger larger inverse head and shoulder pattern to get us back within the macro range from back here that we broke down below after we saw that huge breakdown over here before this major crash started. So that's what I'm looking for. Until they can get it above that, then there is that potential for a retest reject scenario, which I also mentioned in last week's video, this yellow line. I'd like to see the red one, but of course I'm open to either scenario. Need to see it reclaim above 5,510 for me to consider this to be more safe for a lot more upside, to bare minimum retest the previous range around 5,800. So a couple paths to keep in mind going forward here. Obviously is a good sign that futures still opened green despite all this uncertainty. I'm not sure if that's going to stick, to be honest, just because the market does not like uncertainty. And when you have the administration saying one thing and meaning another thing all within a 48-hour time span, there's a lot of issues with that. So sometimes what I like to do is look at what crypto's doing. It's not a one-to-one comparison. And obviously right now that's not the case. Go to this chart instead, just because crypto's actually a mini safe haven in a weird way when these tariffs are hurting US equities, because we've seen gold has outperformed quite a bit. And then also Bitcoin has remained relatively strong when you compare it to US equities so far. So actually I'll go back to the daily here and we can see that it is above my uptrend level. It also closed the weekly above my uptrend level. This is the one I referenced in last week's video. The bottom pivot is over here in August of 2024. If you remember that day where we saw the big VIX spike. And then you can see we tested a little bit under it, but now it's actually picked up from there and it looks really good. And I also want to share an indicator with you guys today. This is relatively well known in the crypto community, but I thought it was pretty useful for previous large moves. And that is the M2, that's money supply. So here it is. And as you can see, if we really scroll out over here, it actually follows, and by it, I mean Bitcoin actually follows it very nicely. So whenever you have some type, and I'll just show you over here, there's just a little bit of a lag, but whenever you have some type of upside move, extension higher, like we saw over here, about a month and a half, 2 months later, Bitcoin likes to follow. So you can see very nice upside move there. And then the upside move followed about a month and a half, 2 months, maybe even 3 months in some scenarios afterwards. And the main reason for this is when you look into what the money supply means, it's all of the amount of savings, amount of funds in money market accounts, and just overall basis for amount of liquidity, global liquidity that is in the global economy. So of course, when this goes up, it does not surprise me that there would be some type of a lag between the time that we saw money supply go up and then whenever that money finds its way into these assets such as Bitcoin in this scenario. So over here, we had that consolidation, also followed by consolidation. And then we had another very extreme upside move, which was followed by extreme upside move in Bitcoin for this nice breakout over here about 2 or so months after that. And then recently, you can see we had another explosion much higher in the money supply. And so far, you can see that this explosion started in January. It's been about 3 or so months since this started to go to the upside and we had that bottom. So you'd assume this is where Bitcoin would find a local bottom and then extension higher. And this predicts that it would go back beyond all-time high. So thought I'd share that. I know I typically just talk about equities because that's what order flow follows and that's mainly what I trade. But this, of course, would be useful in terms of a risk on if Bitcoin goes back beyond all-time highs. Typically, there is a correlation between risk assets in the market as well. So that's something that I'm looking at right now. And of course, as long as it stays above this uptrend, it can continue with that trend higher to potentially all-time highs. So wanted to share that as well in this video. And then the last thing I want to mention is some of these SPY calls that we saw from last week, and also this news over here about the Federal Reserve absolutely ready to help stabilize the market if needed, according to a top official. So I'll show you this here, the SPY unusual calls for the 570 strike that expire in December. I found this to be very interesting because if we go to SPY flow over here, a lot of these were further dated, and it seems like these guys are looking towards much longer time horizon on their calls. They're done and tired with all of the back and forth, which rightfully so, I am too. But they believe that this is going to end up going a lot higher once all of the tariff fiasco is over. So they bought all of those calls that we saw right over here. So 570 strike on a lot of them, and they bought these at the 521 spot price. Pretty interesting that look at where we closed on the week. It actually closed all the way up in the 530s. This is about 534. These are a decent amount out the money and they expire in about 8 to 9 months, which is longer than what we're used to seeing here for like those shorter dated, maybe a month, 2 month or 3 month out, but it also isn't a leap at the same time, because a leap would be over a year in terms of their expiration. So I found this very interesting that they bought all these. They bought it to open. You can see volume is over the existing open interest on these, and the orders are overall bullish on the S&P 500 for the foreseeable future. And maybe they can take a hit in the short term, which is probably what they're expecting as a possibility with taking these far dated expirations, but they're okay with that because maybe the tariff issues continue for another week, another 2 weeks, another 3 weeks, but they believe that after all of this abates, that the S&P 500 will go up again, and they will be able to benefit on that because they have the power of time in this case. And this is something, and it'll be the last thing I mention in this video, this is something that a lot of retail, especially recently, is unable to grasp, that you don't have to trade zero-day expiration contracts. You don't have to trade weekly contracts. Heck, you don't even have to trade 1 month out contracts. You could actually add time to all of your positions. And yes, there's a premium that comes with that, but then you don't have to worry as much so about theta. You don't have to worry about the excess volatility in the markets as much so. And that's just going to help give you a lot more peace of mind, especially if you believe this ends up going up over the longer term, which the market tends to do, historically speaking. So this is a very unique bet for those reasons. And it's definitely something that a lot of retail should consider, at least looking at what these whales are doing. These guys have a lot of money and they're still not as much interested in those short-term movements. They realize that there's that risk in the short term with all the tariffs. And they said, hey, we think this is going up in the longer term. We're going to take that bet, but we're not trying to predict the exact time that it's going to happen within the exact week or month. We're just going to do end of year contracts in this case, and we're going to wait it out. And that's a very useful thought process to take as a retail trader, because at the end of the day, we're all professional risk managers. We need to make sure we mitigate the risk as much as possible and not just solely focus on potential reward, because the only way you can stay in this profession long term is if you mitigate the amount of risk that you take on. So the last thing that I wanted to mention on top of that is this news over here, and interesting timing on those SPY calls, that it was a couple hours or like 90 minutes before this headline came in. But Federal Reserve absolutely ready to help stabilize the market if needed, according to the top official. I found this to be very interesting because this basically means Burr, as you can see with this meme up here that they posted on the account, Jerome Powell is not likely to do just straight up quantitative easing, but there are some other variations that he can do, such as the standing repo facility, which would be a way to provide a liquidity backstop so they could absorb some of the sudden spikes in demand for the repo financing. And this especially helps when leveraged investors like hedge funds start to face margin calls, specifically in the treasury markets, kind of like what we saw with last week. You remember yields were climbing quite a bit overnight. We saw it reach 4.5% in a relatively quick amount of time. So this would help with that if that is something that they're interested in doing. And in this case here, they're saying that they're watching the market now. Of course, the question is always, when will the Fed stimulate? When will the Fed step in? But now at this moment in time, they are watching it. If things start to break or show cracks, they're going to step in right away. They're not going to wait for it to break. That's how I take this. And that's a risk on signal, in my opinion. So of course, that would help the market as well. But with all the uncertainty, we'll see where it opens tomorrow. If it does open above 532.73, I'd consider that to be bullish for continuation much higher to surpass not only gap fill, but surpass this high from over here. If it were to gap down and open below, there's a lot more volatility that we can experience in a much wider range. We're talking 532 to 513 in between here. And wherever it decides to break, either up or down, is where that next trend will be. Otherwise, as always, appreciate you guys watching this video. I'll see you next time.